Hey, Chris Miles here, the anti-financial advisor. Hey guys, I want to just do a quick video for you guys just to talk about something that's so key is that infinite bankings are not equal. They're not created the same. I was just interviewed on our show just today, in fact, and the guy was saying, "Hey, what are some other strategies and tips you can do?" And I said, "Hey, you can double dip on your investment returns twice. You can actually get your money to pay you twice when you do use it with investing or in your business." And I said it was, if you've ever heard of infinite banking. He said, "Oh, no, 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 just stop right there. I've had guests on the show before, and I've looked in this. I've run the numbers, and it doesn't work. Unless you got $50 million, it's not worth it." And I said, "You know what? You're right. You're right. If you do the traditional infinite banking, you're probably going to be true there, because the thing is when you hear about infinite banking, and I have groups that are coming to me saying, "Hey, we have mastermind groups talking about the subject, and they're trying to analyze different policies and whatnot." The problem is that infinite banking has never been created equal, because there's really a few factors here, right? One is the agent actually working with the right companies? You can do the traditional Nelson Nash infinite banking, but it could take you years before you can have cash value to it. There's not quick access to cash. Two, are they actually giving you the lowest fees possible? And by the way, a lot of companies don't allow you to do that. Give you an example. I have a guy that one of my clients that came to me that said, "Hey, would you mind analyzing this infinite banking policy?" And in fact, I think I have a video earlier on this YouTube channel about it. And he said, "Can you look at it?" I said, "Fine. It's probably okay, but I'll take a look." Well, guess what? Even though they've had it for 6, 7+ years, the thing is, if we even just changed it, we actually like took the money from there, did a tax-free transfer to a new policy that's designed properly. Get this, in 20 years, it would make a $2 million difference in cash value. And this is just based on the two, expected returns, right? This is not just based on throwing, crap out there, like, crazy rates of return. This is just based on current rates. And so it's like a $2 million difference. And he would even have a bigger death benefit. That's the crazy part. And he's like, "Wait, but this guy is well known as being an infinite banker." I said, "Yeah, the problem is that even if they're an infinite banker, it doesn't necessarily mean they're designing it properly for one of two reasons. Either one, because they don't want to cut their commissions back that far, or two, they just don't know how to do it. And that's also possible as well. So just know this, that one, they either don't work with the right company, or two, they don't know how to do it, or three, they may not want to cut their commissions back that far and they do something different, or they don't even believe you should cut them back that much. So guys, just know that you got to have, if you want to have the best rate of return possible, just like I told this guy on his radio show, I said, "Listen, if it's designed properly with the minimal cost possible, then this thing can actually create great returns where this becomes a no-brainer, becomes a tax-free supercharged savings account." So guys, that's my tip for you is when you're looking at infinite banking policies, know that they're not all the same. And even if it's with the right company, I have another video using the same company. It was a Penn Mutual example. Even if it's with the same company, you may still not get it as good as it can be. Here, bonus tip. There's a video I did on this about the 90-10 policies. People will say, "Hey, if I get 90% or more of my cash in the first year, that's the best policy to go with." Guys, I show on that video that's not necessarily true. So be sure to check that out, because it might be cheap in the first year, but those costs get higher in the later years. So be careful. Anyways, I hope this is a good tip. If you got questions, reach out to me. You can either go through the website, moneyripples.com, to reach out to me, or email chris@moneyripples.com. I hope it's valuable. Let me see if we can get you the best max ROI infinite banking policy possible. We'll see you later.